Good morning, this is Jack from Charging the Markets, and this is the pre-market webinar for the morning of Tuesday, the 15th of April. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing, learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right, nothing has really changed since yesterday morning. I'm expecting to see a high over this high here, and I'm still expecting to see that. We saw a bit of a retracement yesterday. It wasn't very much in the great scheme of things. I do have some indications we might go a little lower. I was noting on my bigger picture video that we still had the multiple RSI 14 sell signals. We had one on SPX, we got one on NDX, we got one on Dow, and none of these have actually made target. And I was saying we might need to see some more retracement for those to make target. So I'm thinking it might go down a bit at first, but afterwards we should go up. Obviously, though, we have huge news risk. Enormous news risk. We obviously, it was very good news that the tariffs, the main part of the tariffs were delayed, but Trump's talking about putting tariffs on semiconductors. He's talking about basically putting tariffs on electronics generally, protecting US manufacturers. But in a lot of these cases, there aren't actually many US manufacturers. But he's talking about extensive new tariffs. He's talking about it on pharmaceuticals, and this is not cheering news for the market. The more he talks about these, and certainly the more he implements them, the less long this rally is going to be. I'm still really liking a new high over this. On SPX, we now need to break. Sorry, on Qs, we need to break over declining resistance. But I am wary. This is a fragile rally, and it's a fragile rally because the underlying causes of the problems. Yeah, I think it's really time to get out of copper. So I love gold. I hate copper. I don't like lumber here. I don't like oil particularly, although we've got a nice bullish setup, which could play out, but after that the outlook is grim. And I think NG, the lovely bullish setup there, I suspect is failing because of the same reason, lack of demand, lowering demand for energy because of a darkening economic outlook. We do still have a darkening economic outlook. I think there was a lot of talk about, onwards, upwards, SPX 7,000. I think we are a long way from seeing that at the moment. I like NG's got a lovely looking double bottom here. Anyway, I'll come to that. But anyway, so I'm still liking this higher. We have huge news risk here, and we need to be aware of that. We might need some more retracement here. As I said, 15-minute sell signals on SPX, on Qs, on Dia. RTY, lovely looking double bottom here. The more Trump talks about new tariffs, the less likely this is to actually deliver anything. I would say RTY has been the weakest here, partially because Russell 2000 is traditionally seen, and is, I think, the most vulnerable of the indices to higher interest rates. Looking at YM, we've got nice looking double bottom here, and I really like the upside here, and I'm expecting at least to see it move over this high. We saw a bit of a retracement yesterday. Personally, I didn't think it amounted to much, and I think we might see more today, but I don't think that really means an awful lot. I think barring a news event which overcomes everything, I'm expecting really to see a decent week this week. That gives us the minimum I was looking for a rally or a couple of weeks. I think it could extend further, but if Trump keeps putting on more tariffs and keeps talking about it every day, then obviously that's probably going to shorten the life of this rally considerably. DAX, likely heading back up to a higher high as well. ESTX, the same. I'm liking this. It's a holiday week. We've got Easter coming. The stats historically are pretty good. Let's have a look at those. I think the stats, to a certain extent, with the amount of stuff we've got going on at the moment, are not necessarily going to be as reliable as normal. But we've got an awful lot of strength today. 61.9% green closes historically today. 67% tomorrow. Friday's a holiday, of course. Thursday's pretty flat. Next week we have a weakish but fairly flat day on Monday. Tuesday, Wednesday, Thursday, all lean bullish. And significantly so. I was saying at the end of last month that this whole month leaned significantly bullish. we will see. All right, so let's have a look at the bigger picture charts. Obviously, the targets I was talking about on the upside yesterday, we haven't made because we didn't make any progress to the upside yesterday. But what I would say is those targets are, of course, declining. The daily middle band is actually coming down pretty fast. If we don't actually reach it by going up, we'll reach it by going down probably within a week. I'm thinking we're probably reasonably safe subject to news over the next week or so. After that, well, we will see what happens. But after that, I'm going to be on high alert for the rally failing. I'm really hoping to have a decent flag set up if it's going to do that, so that we can see that coming with reasonable accuracy as we did when we saw this rally here. I love more upside here, and this really pattern setup doesn't look complete. But as I said, we'll see what happens in terms of the news. On the Qs, we're testing the daily middle band again because the daily middle band has come down. I'm thinking we've got a decent chance that all of these are going to break up over the daily middle band, and it's my base scenario sees us doing that and starting testing declining resistance trend lines. We haven't got any divergence on the hourly. Again, nice looking set up to go a bit higher, but I don't know how much higher, but I am expecting to see higher highs and maybe some trend lines form. I'd like to see significant higher highs, but we will see how that goes. All right, let's have a look at Dia. Dia, the daily middle band, of course, is coming down to that too. We almost made a new high yesterday. We're a bit short, but we're seeing obviously some resistance here. I'm expecting that to break up through. Depending on the holiday week and hopefully less insanity from the administration in what is a holiday week coming up to Easter. We will see. All right, let's have a look at IWM. We've got on the daily chart, we're again, daily middle band is further away here. It is declining pretty rapidly, the most rapidly here. But we would still be another 10 days or so, or maybe 12, before it actually reached price in the normal course of events. Expecting to see more upside. If we're forming any kind of a flag here, we should see a higher high. Possible we're forming triangles, but it doesn't really look like triangles so far. On the 15-minute chart, this is the only one that didn't have a 15-minute sell signal, but it has got the nicest double bottom, and still waiting to see if that will deliver. We had a slight break up over here. I'm skeptical about that making target, unless there's a major change in administration policy. But I am thinking we've probably got a few more days left. DAX, nice rally here. Looking ideally for a test of the daily middle band, which again is coming down very fast, 21,879. This is still outperforming the US a lot, and I think that may well continue. But I think the decline got going on the Europeans last week. I'm expecting to see quite a lot more of that. On Nikkei, nice rally here. Again, there's the cloud of trade war is hanging over this. Maybe a test of the daily middle band here too. All right, let's have a look at dollar. Now, I did a big post on the dollar yesterday, and I'm doing a big post on the on bonds today. And then I'm doing a wrap-up post, basically talking about the overall position of the US dollar as a reserve currency and what I think may well be happening next, and the risks we're looking at for the next few months. Have a look at the bonds one when it comes out. I'll be doing an updated view of where I did actually do a post in November. It wasn't followed up, but I did a post in November basically talking about the debt situation in the US and where I was thinking, and the big inflection point that still hasn't arrived on bonds, but I think is coming. So I've referenced that in the post that I'm writing today, and I've followed that up, and I'm talking about various other issues which may well be making US treasuries a lot less attractive. In terms of the dollar, we're seeing a bit of a rally here. My main target remains in the 96 area at a big trend line there that I've been looking for since a high in 2022. And I was talking about the possibility yesterday that we might see the current bull flag forming break down, and then a fairly sharp move down back into the mid-70s, which is an area which the US dollar has actually been in that 70-90 range for about half the time in the last 38 years. But we might actually reach that fairly rapidly. And of course, the administration favors a weaker dollar. So watching that with interest. On ZB, we're seeing a little bit of a rally here. It's not much. I think probably we're seeing a bear flag forming, and I'm thinking again do higher highs. Could go more than that, but I think we're probably going to see a further breakdown. The target I've been talking about for probably the last 4 or 5 months is the target down the 104 to 106 area. That should be where TNX retests the high at 49.97, I think. And that is where this huge inflection point is, and where I'm thinking we could see a breakup on bond yields that could take interest rates in the US on the 10-year yield up to the 8 to 10% area potentially. And I'm writing the arguments for why I'm thinking that is on the table in the post I'm writing at the moment. That'll be out probably within 4 or 5 hours, but it's a fair amount to write because it's pretty complex, and I've had to do a lot of research for it as well as the charts. All right, let's have a look at CL. CL, we've still got a lovely looking IHS, but no sign of it breaking up so far. It may still break up. Is there much room in this environment for this to rally? Well, we're seeing equities rally, and we're seeing crypto rally, and we're even seeing copper rally. So I'm thinking we could see this on oil, but it wouldn't surprise me to see this fail lower. I think on the bigger picture, we're actually seeing a break down below the previous low at 63.57. I was looking for a retest of that for quite a while, and I think it's possible we're going to fail here because that's now turned into a ceiling. I'd love to see it move up to 71 because that would provide a very nice looking short entry, but I think the overall picture for oil here is not looking that great. NG, we've got a lovely looking potential double bottom here, but we've got no positive divergence, and I am concerned that the same reasons which are taking CL down, which is expectations of a recession, taking down demand. That's not good for oil. That's not good for lumber. That's not good for copper. And really, it's also to an extent, not quite so much so, but to a significant extent, it's not good for natural gas either. We could be seeing a fail down here. And on the bigger picture, I've actually got a double bottom target. I'll show you that. Because George mentioned that he's playing this at the moment. So just to recap on this, although I was talking about this on the bigger picture, which is always worth watching. But let's have a look at that. And we've got a double top here, which is broken down. And it's this double top, arguably a head and shoulders, but either way, it's got a target down in the 3 area. And we've made a lot of progress towards that target. And we do now have some positive divergence. So I've got a possible daily RSI 5 buy signal brewing, but I am concerned that we're going to head down to that target. And then if we do reach that target, then it may be the upside target in the 5.75 area may be off the table. We will see. All right, let's have a look at GC. GC, we're seeing a bit of retracement here. It looks like a bull flag forming. One thing I'm arguing over, basically, we'll mainly be talking about this tomorrow, we'll be arguing that actually if the US Treasuries are in trouble, and there's going to be a significant exit from US Treasuries and a rise in US interest rates, then gold may be a very big beneficiary of that. I am really liking gold. Let's have a look at palladium and platinum. I think I've been mulling over what to do about stock charts failing to continue doing quite a lot of the charts that I've been using, and I think what I'm going to do is I'm going to start tracking the hourly charts on my interactive brokers of the futures. And looking at the daily charts on there. I haven't done that yet, but in the meantime, let's have a look at what I've got. And what I do want to show here is that by historical standards, platinum, palladium, silver, copper, these are all industrial metals, but the precious ones all have potential value as currency assets, as stores of value. And I would say that by historical standards, prices are low. This is just the prices from 2022. Let's expand that on palladium. Now, I'm still thinking that we might see a retest this low here at 808. If we see a significant retracement, then maybe that could set up a beautiful double bottom. That on a sustained breakup over 1248 would then be looking for a target in about the 1700 area. How high is that target by historical standards? Not high. And actually, let's have a look. Okay, I haven't done the monthly charts on here yet. Let's just have a quick look at it now. Let's have a look at palladium on the monthly and look at it on the long-term chart. Let's have do the same thing on platinum. All right, hang on 1 second. I'll share how far these charts go back. All right, okay. Right, by historical standards. Now, obviously, this for a long time this was kind of the level to look at. But you've got to remember that that there's this chart doesn't account for inflation, which has gone up, obviously gone up quite a bit. And also assets have been inflating. And if we're going to be talking, if we're looking at a situation where US Treasuries might be in trouble, then we're going to be looking at a situation where other assets that aren't US Treasuries that can be a flight to safety destination are likely to be going up. I like platinum for that. I do. It's a precious metal. It's compact, easy to store. It's very valuable. I'm going to be looking at a range of these in my post tomorrow. But that's certainly one of them. On palladium, platinum is another one. I mean, there's other ones like rhodium, iridium that I'm going to be looking at. And, you know, I don't think the rare earths are worth enough. But anything which is compact, rare, and very valuable is liable to see a boost. And I'm looking at platinum here. I mean, obviously, all-time high was 22.90. We're down at the 850 area. Is this looking expensive? No. Could it go down? Yeah. Industrial metal is industrial use is declining, and cars, well, you know, cars got problems at the moment. But I mean, on the other hand, as a store of value, I don't see there's anything wrong with platinum. I think we might see platinum and palladium actually get a big boost, and silver as well. Silver less so because it's worth a lot less than the others. But even so, I think we could see a significant boost in metals which are store of value. And I think that actually potentially this could feed through heavily onto crypto as well. All right, let's have a look at, hang on 1 second, I'm running out of time. Because the crypto webinar starts shortly. Okay, looking at SI, looking like we're consolidating here, maybe see a bit of a retracement. We've got a weak 60-minute sell signal here, but I'm not taking it particularly seriously. I'm thinking we see a bit of a bull flag form here, and then we go up. HG, I've already said my outlook for HG. I think we could rally some more, but I think it's a sell. I think the US economy is likely going into recession, and the more tariffs that Trump puts on, the deeper that recession is likely to be and the longer it's going to last. KC, we've got an IHS which is breaking up with a target here in the 398 area. We've got some resistance at the monthly pivot at 383, but this is proceeding to plan. Sugar, I'm concerned on the bigger picture about a big breakdown. We do have a nice looking double bottom here. There is some reason to think it might go up, but the bigger picture charts are not encouraging. CC, nice looking double bottom here, not really done anything since. Wheat may still be a bear flag forming. Corn has broken up, looks like a bull flag forming here. This is broken up with a target in the 513 area. On soy, we have got a break up over this resistance here. I'm surprised to see that because maybe people are assuming the trade war with China won't last long. I'm not making that assumption. And 50% of this, I think at least, goes into the Chinese market, and at the moment it's not going there. So I think soy is likely going down. Cotton, keeping an open mind. Lumber, likely to be weak. Nice looking double bottom here, but I think it's a long shot to think it plays out. Live cattle, 60-minute buy signal is reaching the possible near miss target area. Nice looking IHS here, and I'm thinking that may break up and come back into a retest of the high. On lean hogs, heading up towards the monthly pivot, may well find resistance there. Buy signals pretty much made target. Okay, great. Let's have a look. I think that's covered all the questions. I think my feeling is on equities that we're going to see a flat to decent week. I'm still expecting to see retests over these highs. I would really like to see a decent bear flag forming if we are going to be failing soon. I'm thinking we might be failing soon, but I'm thinking that would probably be next week rather than this one. We will see. This is a fragile enough situation that if Trump says the wrong thing in an interview, then we could head straight back to retest the lows, and then obviously another inflection point there. But normally we would set up some, if we were going to go down, we would set up some sort of a flag-like pattern. To do that, really, we're going to need to go higher. These don't look like triangles forming, so I'm expecting to see higher highs. I'm thinking we're probably okay until next week. But next week, I'm thinking it may well be that we'll start a hard fail and start heading down to much lower targets potentially. We will see. All right, my pleasure as always, guys, and I will catch you again tomorrow.